Hello everybody and welcome to the midweek market update from Smack the Markets for the 17th of July. So with the US indices breaking out to all-time highs, with also in a strong US dollar environment and also so much political rhetoric pushing a number of markets around pretty much on a daily basis, where are some of the best trading opportunities for today? So let's go and take a look at some of the markets that we're keeping an eye on in the trading room here. Now, the US indices here have been on a very, very good run over sort of recent weeks, and we can see that the market's now sort of pushing up to all-time highs. This is the Dow futures contract, and indeed, this market still looks very, very bullish. Doesn't look like there's an awful lot in the way keeping this back for higher prices. If anything, the higher timeframes here, like on the daily and the weekly, do start to look a little bit stretched, a little bit extended from the moving averages, and in which case value areas, we need to wait for the market to retrace in order to be able to get value entries on some of these markets. If we come and have a look at the S&Ps though, the S&Ps look a little bit different to the Dow there, and if we have a look at the S&Ps on the daily chart, this looks nowhere near as extended as the Dow, and from just a technical perspective, this would be a slightly better preferred market here for me on looking at intraday opportunities. Reason being is if we're looking for trades on the Dow, we're going to be looking for all-time highs to be attended even further for that market to play out further long. On the S&Ps here, we've still got some distance to go up towards the highs here. So if this trend is going to continue, the market still needs to move up to test the highs again. If we take a look at this on the 4-hour and the 8-hour chart, we can see on the 8-hour, the market's just sort of pushing out of those moving averages, just out of that value area there. And here on the 4-hour chart, we can see that the market's still clearly got plenty of distance to go, even for retesting the old highs. So for me, this is more of an intraday opportunities on these markets at these levels, but certainly looking at the S&Ps, it gives us some sort of distance here to be able to look for targeting up here towards the old highs. Now, if we come and have a look at commodities, oil has been up and down like a yo-yo, pretty much being sort of driven by the sort of political situation with Iran, and that makes that market just a little bit more sort of challenging to second guess because of the volatility surrounding news announcements. If we come and have a look at the precious metals, though, I think silver is starting to look a little bit more interesting. Gold is very sideways at the moment, but silver is starting to catch up with gold in some respects. If we have a look at this on the weekly chart, we can see that the market here is now in a confirmed uptrend. So we've got a low, high, higher low, now a higher high, and the market has broken out of this sort of level where the market sort of found key support and resistance before. So that's around sort of 1540, 1550. And you can see that the market's sort of pushing up into a new area there. Now, looking at trading windows, there looks to be on this sort of time frame, you know, even if we start to look, well, where's the next sort of structure point here? We've probably got quite a distance here on this market to the long side, possibly up here towards that sort of $16 level, and that gives us plenty of distance here to look for opportunities. On the daily time frame, the market's now sort of sitting above its sort of structure points here on the daily time frame, which is looking sort of quite nice, and breaking into a new sort of trading window up here towards that $16 level. The same story comes down to the mid time frames. When we look at the 4-hour chart and the 8-hour chart, we've now got uptrends forming here on these markets with convergence, with good geometry, with the moving averages as well. So as the market pulls back into key levels here, these are areas where I'll certainly look for entry opportunities to be able to sort of look for new long positions on this market. And again, if this trend continues, then we could be looking for higher prices here in silver. Now, from a currency perspective, a lot of these currency markets have been pushing around over the past sort of few weeks here, based upon the political environment and the news flow. Looking at euro dollar has been within that sort of environment. It has been pushed around just like with every other market, but it has been reacting very technically to some key levels. At the moment, the euro dollar is sitting right on top of a key level here around 11200. It's been a very strong level. It's been a level that we've had many trading opportunities around. And underneath that, there looks to be sort of quite a distance underneath for price to go. But equally, there is some well-structured levels and well-structured points for long opportunities as well. Now, bear in mind that this euro dollar is 1/2 of the US dollar equation, and US dollar is expected, or we're expecting, the market's expecting lower interest rates in the US dollar, which may well put us into a weaker dollar environment, and in which case the euro may well benefit from that, may well get a bit of a lift on that. So I'm keeping an open mind on longer term directions here. But if we come and take a look at this on the daily chart, we can see that 112 is a very, very good key level. Right underneath that, we've got 11180. And when the market sort of breaks through 112, it sort of kind of fills the 11180 sort of fairly easily. And we can see that multiple times before. So that's an easy move. And then below that, there's not a lot in the way for a substantial move to the short side. That we can see that more recently the market did rally up to test 112,700. Now 112,700 is again another very key level on this market, just above that being the 11300, again another very key level on this market. So we've got some very, very well structured levels and decision points above price and below price, and some decent sized trading windows either way. My preference ultimately would be for this market to continue short. But again, I'm just a little bit sort of keeping mindful of the US dollar interest rates sort of coming up towards the end of the month. So from an intraday perspective, what could we look for here? I'm certainly looking at opportunities here below 112. So if the market can break below 112 and we get sort of signals here, I'll certainly be looking down to 11180 for as a target level, and then beyond that for new lows. From a high side here, if the market finds support and we start to get a rally here, and bearing in mind that US dollar has had a good run of late, so that could sort of soften off for a few days, giving the euro a bit of a lift. And if that does, then we've got this other level here on the 4-hour chart around 112 sort of 200. I think above that could put us into a safe distance here, a new trading window back up towards the 112,700. And that's a level that's been, as you can see here, has been tested multiple times before. So once these levels get broken and taken out, those trading windows tend to get filled fairly quickly, and that is quite a decent size window there. Well, there's some 500 points there to look for opportunities. So there's a few markets there that we're keeping a close eye on in the trading room. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.